China did a good job in the afternoon of massaging its markets ahead of the holiday. I think markets are going to be very nervous on Monday coming back in after this 4-day break, you know, whether China can still support or there's another leg down.
Xi Jinping said that war is like a mirror. He says that when you look into it, you all the more cherish peace. And he said that the Chinese people love peace and they've got no intention of expanding or any hegemonic interests. So he was talking about peace all the time, and that was the context that he said he was going to cut those 300,000 people from the Chinese military. But, Anna, when you're rolling an intercontinental ballistic missile down through Tiananmen Square that's capable of delivering nuclear warheads as far away as the United States, I think you're also delivering another message, and that message is don't mess with China.
Now is the time to address the underlying problem, which is the economy, which clearly is slowing. But I have to say I probably lose more sleep about growth in the Eurozone than I do in China. Because even if China is growing at 3 to 4% and running out of steam, at least it still has steam. And also it does have the wherewithal to get things going. China's sort of policy dashboard, if you like, has far more buttons on it than certainly we do in Europe.
I think what the market's really looking at now is what the Fed will do, and it's the impact of China on the Fed. At the moment it's saying it has no impact. I think even looking at the Beige Book yesterday, there were some signs that on the borders with Mexico and Canada, there's some impact now of weakness in those regions. And I don't think the Fed can carry on saying that this doesn't matter, that China doesn't matter. So the market wants to see when the Fed is going to really kick the rate rise.